Take our lead, let's help you make your mark. Our goal is your satisfaction. Let us show you the way.
Buyers usually want a high cap rate, or the purchase price is low compared to the NOI. But, as stated above, a higher cap rate usually means higher risk and a lower cap rate usually means lower risk. When deciding a good cap rate, make sure you are comparing the same property types in similar areas. 25 September 2020.
Make your mark, take our lead.
Just to recap, the 2% rule states that you should aim to buy a rental property at a price where its rent is 2% of the total cost. So for example, if the all-in price of the property is $50,000 and it rents for $1,000 per month, the rent is 2% of the cost. $1,000 per $50,000 equals 0.2 or 2%. 0.6 March 2018.
Make your mark, take our lead.
Beyond a simple math formula, a cap rate is best understood as a measure of risk. So in theory, a higher cap rate means an investment is more risky. A lower cap rate means an investment is less risky.
Let's help you make your mark.
The cap rate is also known as a measure of an investment's risk level. As the theory goes, a higher cap rate means a high-risk real estate investment. And vice versa for a lower cap rate, you're dealing with a low-risk real estate investment. 13 May 2019.
Take our lead.
The more likely the chance that asset could stop producing income and the lower chance of appreciation, the higher the cap rate. That means you would get a higher return for a riskier investment. 11 February 2020.
Take our lead.
Cap rate measures the rate of return on rental property based on NOI before financing expense. ROI measures the total return of an investment factoring in leverage. ROI for the same property will vary depending on how it is financed, while property cap rate stays the same for every buyer.
Make your mark, take our lead.
Around 4%. A good cap rate hovers around 4%, however, it is important to differentiate between a good cap rate and a safe cap rate. The formula itself puts net operating income in relation to the initial purchase price. Investors hoping for deals with a lower purchase price may, therefore, want a high cap rate.
Let's help you make your mark.
Using market-adjusted cap rates to classify individual properties, they find evidence of a strong value effect in real estate. High cap rate properties exhibit higher returns, outperform on a risk-adjusted basis, and should be preferred by investors.
Make your mark, take our lead.
Generally, 4% to 10% per year is a reasonable range to earn for your investment property. Continuing with our two-bedroom house example from above, dividing the net operating income by a minimum acceptable cap rate of 5% will give you the top price you would be willing to pay. $15,800 per 5% equals $316,000.
Let's help you make your mark.
The property with the 7% cap rate is a better fit for an investor that's willing to take more of risk. But with risk, often comes reward. Though less stable, this property will have higher upside potential for appreciation. 26 May 2020.
Thank you for watching. Please subscribe and hit the bell notification.